the worst thing that can happen to a trader is if they break their rules and win. The price action can't hide right there out in the open. It is what it is. It's the truth. And so I always talk about the trader three-legged stool. So one leg is your methodology. The second leg is your money and risk management. The third leg, which is I made 12 grand in my early years trading crude oil, and then I lost it all in one day. A lot of people trade because they have a low self-esteem. They're trying to validate the reason for existing in the first place.
Okay, welcome to another Trading Battle. I'm your host, Steve Ruffley. Now today we're joined by Troy Noonan, who's been involved in markets for more than 30 years. So a veteran and trader mentor and creator of multiple trading systems used by traders in over 100 countries. Now, Troy is known as the backpack trader, and he's spent nearly 2 decades hosting live trading rooms, teaching traders how to achieve consistent, sustainable success through price action based approach. Now, his methodology helps traders move from being just someone trying to trade to someone that can build trading like a business that is structured, disciplined, and also profitable. Obviously, we know that is important. It's helped thousands of traders worldwide to achieve win rates above 80%. His mission is simple, okay? He wants to help ambitious traders create freedom and success without burnout or chaos. So, Troy, welcome to the show. How are you doing?
I'm good. Thank you, Steve. Excited to be here.
Excellent, excellent. Well, I'm going to start with the question I always ask every guest. So, 30 years ago, how did you get involved in trading?
Yeah, and I wish it was 30 years ago, but time marches on. It's more like 34 years ago now, going on 35, actually, with the new year coming up. Got to update my bio, I guess. So it all started when I was burning myself out running a very successful business that I'd gotten involved with. And it was very people intensive. Maybe I slept 3 hours a day. And I always use the analogy, I felt like too little butter spread over too much bread, if you know what that means, right? And so one day I got a brochure in the mail, and it introduced me to the idea of trading. It showed a price pattern and how much money was made off of that pattern. The pattern was called a Head and Shoulders. And I'm instantly thinking, what does shampoo have to do with trading? Obviously, nothing at all. But I ended up getting excited about trading. That was my first introduction or exposure to it. Soon I opened up a discount broker account. In those days, the commission was like $50. Round turn was a discount, and it was half price from the $100 round turn, and subscribed to paper charts. So every Monday I'd receive the charts, and then Tuesday through Friday I would fill them in by hand with the closing prices in the Wall Street Journal. And that taught me a lot. So one day I saw a Head and Shoulders pattern set up. It was on the pound, the British pound versus the US dollar. And I shorted the British pound. And what I didn't understand or realize at the time was that I unwittingly got on the same price action that went down in history infamously as the trade that broke the Bank of England. Gentleman by Soros. Yeah. And I was shorting the pound when he was. So lucky me, right? Talk about jumping on a big wave. And so I ended up, we know Soros made billions. The Bank of England, the currency lost 25% in a very short amount of time, which was crippling to the bank and to the country. I didn't know any of this. I just know that I made several grand, and I was like really excited. So I took my money and put my business in the hands of a capable manager and backpacked through Europe for about 3.5 months. And the backpack trader was born, although I didn't realize it at the time. But I had experienced a level of freedom that I had never known. And once I experienced it, I was never going to let it go. And being a drummer, I picked up a set of bongos along the way because they were portable. I'm backpacking. You should have seen me carrying a big old pack and a pair of bongos. I mean, I was, like a mule. I was just packed all kinds of things. But I was sitting in with street musicians all over Europe. And in Florence, Italy, I met a Venezuelan musician. We ended up traveling around, going into bars, playing for free beer, entertaining their guests. And eventually we went our separate ways. But when I finally returned home, I received a fax from him inviting me to Caracas, Venezuela to hang out with his band. They had a little in-country tour they were about to go on. And so I went. And within 24 hours, actually less than 24 hours, I ended up meeting the woman that I ended up marrying, and we just had our 30-year anniversary a couple months ago. So, and I got 2 kids now in their 20s. I always say Soros made billions. I made a wife and kids and a level of freedom that changed my life forever. And I'll let you decide who got the best end of that trade. But that was when the backpack trader was an infant. It was born, wasn't aware of itself yet, but that's how it kind of started.
Wow, that's really interesting. So a lot of kind of serendipitous kind of moments there, kind of seizing the opportunity. And yeah, I totally get the idea of freedom. But a lot of my kind of mantra is that trading's more about the money's great, but it also gives you time. You've got to be able to enjoy the time. It's I think a lot of people dive into the learning and the trading, sit in front of screens for 12 hours a day, and then you can miss the point after a while. The whole point of this kind of endeavor is freedom. At the end of it, to enjoy your time.
I always say we don't need another job. I don't need to nurse a bad set of hemorrhoids sitting on my butt all day long, Velcro to the chair with my eyes turning into corkscrews. That's not a quality of life that I'm interested in. You need to put the upfront time into learning,
Mhm.
but the time that you invest wins you your time back ultimately. The backpack trader, of course, is the symbol of freedom you get if you get trading right. And I always say, and I learned this with the other company I'd worked for 15 plus years, developing trading strategies, hosting a live trade room. You want to get in, get out, get done, and then get on with your life. And so for me, it's all about creating a trade plan that's going to work for each individual, works for you specifically. And the trade plan has within it a goal. And if you hit the goal, you're done for the day. We call it the power of quitting. It empowers you to quit trading for the day. And if
Yep.
you have a really good trade plan, the kind of stuff that I teach and help my members develop, you're often hitting your trade plan goals with the very first trade. And ironically, or coincidentally, whichever adjective you want to use, last year I was in a cafe in Florence. I finally went back after all these years of meeting my Venezuelan friend where the backpack trader was born, right where it all started. And I traded one of my trade plans from a cafe in Florence. I had someone recording it behind me, and I was doing a screen share also. I edited together a nice little 2-minute video. But the reason why it was 2 minutes is because that's literally how long the trade plan took to set up,
Yep.
trigger in, to get out and be done. Literally, my goals reached within 2 minutes from a cafe in Florence. And then later that day, I'm drinking beer in a bar around town, talking with some people I just met. Obviously, just living that lifestyle of freedom, right? And they asked
Uh-huh.
me what I did for a living, and I looked at them right in the eye, real serious. I said, I work 2 minutes today. What do you do for a living? And of course, I was kind of being tongue in cheek and silly about it, but it was also true. And they were clearly interested in what I did. But as soon as I brought up what I did, their eyes glazed over and I lost
As
them.
they always do, yeah.
Yeah. So, we're talking about our favorite, pizzeria. But anyway, that's a true story. And I show that video sometimes because ultimately, if you keep trading like that, you minimize your risk exposure to the market. You're
Yep.
quitting with a winning result a vast majority of the time. We're talking about a day trade session now, not swing trading. It's a
Yep.
different thing. But when you start your session, a vast majority of the time, I like to shoot for that 80% number, give or take. You're going to quit your session with more money than you started with. You're going to win the session, and then you're done. And so, like this, you're always growing your account. And at some point, you're going to give yourself a raise by moving your finger from the 1 to the 2. Now you're doing another contract. Eventually, the 2 to the 3, and then the 3 to the 4, 4 to the 5, 5. So it gets faster, faster, faster because you hit that exponential curve, and the rate of growth also accelerates until you get as large as you can get. But ultimately, the same trade, you're not trading more to make more. There's no reason to trade more. What's the reason to trade more? There's a random distribution of wins and losses no matter what. You
Yep.
ask any experienced trader that you have on your show, and who's going to disagree with that? That's just a fact. No one wins 100% of the time. It's a random distribution. So how do you take advantage of that? Well, you keep your winnings and you reduce your losing, your losses. So one of the philosophies that I work into everything I teach is that we want to take what the market wants to give us, not what we want from the market. And over time, that averages out to a nice number, especially when you start leveraging up your position size based on a real safe risk to capital ratio. So
Yeah.
money management becomes a key component, obviously.
That's interesting because I don't get to speak to too many true day traders, because when you talk about trading, as you rightly said, people naturally go to swing trading, holding positions for days, weeks, and months. When you're talking about 2 minutes in a trade, that is essentially a scalp. That's what that is.
In this case, it went through 3 different targets faster than you can
Mm.
sneeze. It just happened to be like a cork out of a champagne bottle. Scalp
Yeah,
is one of those things that's loosely defined. A
yeah,
scalp could be something for someone and mean something totally different to someone else.
yeah. True, true. I mean, I guess what I'm trying to get on board with is your idea of this time. Because I'm very much on the same page. That the less time you're involved in the market, the less time risk you're actually being exposed to. So when you kind of combine that with the ability to scale up, and that's really what I want to talk to you about. Is how do you get people to scale up? Because that's the thing I've found very difficult. That everybody wants to trade a plan, everybody wants to trade risk management. When it comes down to it, actually scaling up positions from a psychological point and from a monetary point is very difficult for traders. And how do you kind of work through traders to help them overcome that?
Well, I try to introduce this concept of the ramp. And it's not just a ramp that goes up at a 45-degree angle. It's a ramp that starts out real flat and eventually it goes up a tiny bit and then a tiny bit more. And I use the image of a big, huge, gigantic one that hasn't even been built yet, gigantic jumbo jet rumbling down the runway, trying to get enough air under its wings to lift it off the ground, and bounces up and down a little bit, but ultimately it gets airborne. And that's the same thing as a new trader starting out. They're not going to be able to increase their position size for quite some time. Much
Yeah,
depends on their trade plan, what their average net profit is per trade, and all of that, and what their starting account is. But at some point, and this is why most traders fails, because most people have this microwave mentality. They want that immediate gratification. You have to think of trading as a business, and all businesses take time to establish themselves and ultimately grow at some point, right? And so if you don't have the stamina to get through that first part of the runway, you probably flame out and quit. If you stay with it, then eventually you're going to increase your position size as your account grows. You have to hit certain goals. Ultimately, you're trying to preserve your capital, right? That's what should be the primary objective. And so you can't over risk. If you risk too much, the random distribution of wins and losses is going to knock you out, even if your strategy wins 90% of the time. The perfect storm is going to happen. Every so often, there will be 10 losses in a row. And most traders get derailed by that because they haven't done the preliminary, what I call the foundational work before they start trading. I'm a big believer, like what I always teach in my program are there 2 tracks of learning. One is technique. Those are different strategies, right? Different, this setup, that setup, ways to trade, methodologies, etc. That's one track of learning. But the second track of learning, I even think is more important. It's how do you succeed with those techniques? It's learning that. And that's a completely different set of learning. And one way to think about it is learning to paint by numbers, right? That doesn't make you an artist. How do you become an artist? When you learn the technique of painting by numbers, or any technique. Learning a piano scale doesn't make you a pianist, doesn't make you a musician. How do you become a musician? You have to learn how to use those techniques to make music, right? Well, it's the same thing with trading. Everyone out there is teaching technique and how to trade, but very few people are teaching you the other track of learning, which is how to succeed and achieve sustained success with those techniques. And the reason why that's a big problem, most people don't even know how to teach that, first of all, or they don't even consider it. But there's a random distribution to all trading. I don't care how good your system is, there will be losses, and it'll come when it comes. So how do you deal with that and still win your sessions or your trades the vast majority of the time? Works with swing trading too. It's just a different outlook. It's a slightly different way of looking at it. I swing trade. I love swing trading. I do both. But The concept is still the same. Technique, but then how do you sustain success with the technique? That's the thing to focus on. I call it the trade plan hacking framework. That's my little, label for that. And then the first word is the clue as to how you do it. Trade plan. I'm a
Yep.
big advocate of that, but creating a trade plan the right way is essential versus creating it a bunch of wrong ways, which most people don't know how to create a trade plan properly.
Absolutely, absolutely. And do you kind of promote any particular, kind of instruments to trade? Are the things that you prefer that these kind of, your kind of strategies work better on? I think the whole point is for the people out there listening is there's so much noise, so much going on. People are buying Bitcoin, drop below 90. Oh, we must trade Bitcoin, or Nasdaq's dropping off, or the currency's doing this. How do you kind of focus your traders to kind of understand what market they should be in and why, or is it just purely going back to the technical patterns setups?
That conversation could be a podcast in itself, but I'll merely start off by answering like this. For me, and what I teach is that you have to have an overriding philosophical point of view. You have to have a philosophy. And I think if you do, then that helps keep you on track. So for me, it's simply a few things. One is that the price action can't hide. It's right there out in the open. It is what it is. It's the truth. It's always moving to find its value. It's that, that point between the two forces, buyers and sellers, and then everyone on the sideline coming in and everyone exiting, right? It's the collective wisdom of the market, which reflects human nature. So this is part of my philosophical view. I also believe human nature doesn't change. And as a result, we get price patterns that repeat over and
Yep.
over and over. And so if you can learn how to identify a particular price pattern that happens so often, you have such a large enough sample set, you can predict what's likely to happen next, right? That's what I've kind of staked my whole career around, that idea. And then I create custom indicators that isolate one of those particular patterns. And then through certain other philosophical things that I incorporate, it's able to print the trade right on the chart where it shows you the entry, the targets, the stop. It's right there on the right edge of the chart in real time. And now you have a structured tool that you can go back and prove over a certain amount, large enough sample set, that you're going to win a lot more often than you're going to lose. And so from there, you can create a trade plan with rules. So just taking then that philosophical idea and going down a little further, there's this idea that the immediate past can predict the immediate future with a large degree of accuracy. And the immediate past is the thing that printed that trade setup right on the chart because it's what created the pattern. And the immediate future being predicted are the actual price targets that are printing. That's what our objective is on the trade. And that's what's the predicted immediate future is. And if you do it right, and if it turns out, if you've done your homework and created the trade plan right, those targets become very accurate for the most part. Obviously, it's not going to win 100% of the time, but it's going to win most of the time. And it's going to hit those targets right on the nail a lot of the time. So from there, you can create a trade plan and you could structure a whole lifestyle around that. An hour a day or less. For example, that one I told you about, use the same principles, was a 2-minute session. But that happens sometimes. I'd say 40% of the time, maybe, on a good trade plan created with these ideas that I'm talking about, 40% of the time, you'd be one and done and hit your goals in the first trade. The other 60% takes a few more trades. Maybe 20% of the time, you'll have a losing session. A little more, a little less, depends, but somewhere in there. That makes sense.
So that makes perfect sense. Yeah.
But so there's this philosophical idea. So back to your question about what to trade. For me, for day trading, it's the usual suspects. It's the stuff with the most volume. You're going to want to go with the E-minis. They also have micro contracts, which I think are really important. A few years back, the micro contract idea existed, but there wasn't any volume. You couldn't trade those markets. Now you can. Crude oil futures, great, good micro contract. And gold, I mean, I'm blown away by the micro contract of gold and how many people are trading it now it's up to 456,000 contracts just today for the micro gold. It moves like crazy, and it trades even late into the day and into the evening, and it's like always trading. So it's like maybe that's a good one, right? It could work around a specific person's specific needs and lifestyle. So you have to create a trade plan and focus on an instrument that fits you. Like, if you're in New Zealand, or if you're in Hawaii, or if you're in New York, or you're in Chicago, or wherever, you have different time zones. You need to figure out when you can trade, when you can't trade, when you don't want to trade. You got to do some personal analysis, and then it's easy to eliminate everything we shouldn't pay attention to. And then there's a few suspects, the usual suspects, that are remaining. And so there's some Forex you could day trade too, but I'm always like, why would you want to with these futures contracts? The price action is just so much more active. And then for swing trading, Forex is a good choice, but I like also swing trading stocks, but I'm using the stock setups to trigger simple options trades, just directional calls and puts, nothing fancy, but real effective, that deliver double and triple percentage returns per trade with high win rates. And so you focus on the instruments, or the symbols that I call them, obviously, that have real high volume, millions a day. It doesn't have to be. I mean, you could do a million a day, symbol that trades a million a day or somewhere in that range. But, depending on how, you can't get that large with those. But with the big volume names, you can come up with a roster, and each symbol becomes its own trade plan that you've tested and proven. And so you create a roster of symbols, and that becomes your swing trade business, so to speak. Should take you about 30 minutes a week on average, a few minutes a day, to run and operate that once you built it. So you invest the time up front, and then, like planting a tree, takes time to plant it and then for it to grow, but then it just keeps on giving, right? Fruit tree keeps on giving you those apricots, right? So that's kind of the concept in creating a swing trade program that you could succeed with and do really well with. So then it's all about the ramp again, right? It's that ramp. So let's say you have a 2 to 5 year trajectory, which I think is a realistic trajectory of time to start seeing results and becoming successful, depending on how much you start with. But you've got to figure the first 80% of that time, you're only going to make 20% of your money, maybe less, and you're probably going to flame out. The last 20% of that time trajectory is when you're going to make 80% of your money because of that exponential curve, if you're managing your money and growing your position size as your account grows. So the ramp is like this. It's not like that. Does that make sense? That's a good way to think about it, right?
Yeah. So I guess the other thing that was interesting that we were talking about is the kind of personality kind of side. Obviously, markets have their own kind of personality, depending on, who trades them, the volume, individuals, institutions, etc., etc. I mean, what do you find with people that you mentor from a personality perspective? Because I think what I've experienced is a lot of people want to day trade, but then can't handle the kind of losses, so they go immediately, well, I'll just become a swing trader, put a stop in, and watch the markets. So, what my question is, I guess, is how do you identify personalities in people, then marry that up with the right products and the kind of strategies they should use? Because I don't think it's one size fits all in trading.
No, it's not. And discovering your own personal trading style takes time, and you're not
Mm.
supposed to know what that is when you're brand new. The good thing
Yeah.
about being brand new is that you can be taught correctly the first time instead of a lot of wrong ways, developing bad habits and paying a high tuition to the school of hard knocks, which is what most people go through. I call a person starting out, or a person that is at that level, a person trying to trade, which is normal. We're all people trying to trade when we start, but that's always going to lose. That person's going to lose because people aren't born to be good traders, right? You have to learn how to become a trader. One of the main reasons, of course, is that we don't like insecurity, because it's easy to look at all the beautiful trades that happened on the chart. You could see all those nice moves. You can imagine yourself being able to trade them and all the money you would have made. That's what enamors people and gets people excited about trading. But then when you finally take that first trade, it's on the right edge of the chart, right? And it hasn't happened yet. The future hasn't happened yet. No one can control the future. And so you instantly start feeling insecure, because the money that you're risking is almost, it's a proxy. It's representing your basic survival, and losing that is a threat against your survival. It's how we interpret it as people trying to trade. And so once we're in that trade and we can't control the outcome, we're going to feel really uncomfortable and try to run away from that and stop that insecure feeling. It's kind of like being in an earthquake, right? You don't know if the ground's going to open up under your feet and you're going to fall into some abyss or who knows what. That's this feeling, that panic, that primal feeling, right? That's what happens to people trying to trade when they're in a trade on the right edge of the chart and a trade's going against them, which often happens before it goes in their favor. There's the time a trade needs to develop, or it's just going to lose. I don't know. But the point is that when you're a person trying to trade and you're experiencing that, you want to stop that feeling because it feels like a threat against your survival. And so you're going to do everything wrong. So what I always try to teach people is that you have to transform yourself, and that you go through steps in the right order, and you acquire a belief in what you're doing. Because if you believe in what you're doing, then you know that ground isn't going to open up beneath you and you're not going to fall into the abyss. You know the ground is there, right? Or whether the trade wins or loses doesn't matter, because the trade plan grows your account. The trade plan. And inside that, there's a bunch of trades, each one a business transaction. Some lose, more win. The account grows. And as you acquire that understanding and belief, you start to realize trading is more than just the trade I'm in. Trading is the business of trading. And how do you prove that you're going to be able to grow your account while being in the business of trading? You have to have a trade plan. So how do you create that, and how do you fit that to your personal style? Well, at first you have to answer questions about yourself. When can you trade? When can you not trade? How much knowledge and skill do you have or not? How much money do you have? Risk capital, that if you lost it all tomorrow, won't change your life. That's very important, because you don't want to trade in this position of fear and discomfort. And that's the first sign that you're over trading, by the way, because if losing that money is so dramatic and will have such an impact on your life, you should not be trading that. You're making a huge mistake. You're going to lose it. Those first few things you have to learn, and it's all about just having the conversation with that person in the mirror. But you also have to have a real strong reason why you're trading. And most people get this part wrong. It seems simple, but it really isn't. Because most people are going to shake their head yes and then move on and do something entirely different that's not congruent to why they're shaking their head yes. If I were to ask you, Steve, why do you trade? What would your answer be to me?
Well, we said off camera, it's time. It's time for me.
You're trading for time. Right. Okay. So time and money, do they equate? I always say you're trading to make money.
That's how much money you got.
Because then you have the freedom to have all the time you want, right? So trading
Exactly.
Okay. So you have to make the money in order to get the time, but it's the same answer, right?
Yeah.
The only difference is we know how much money we have, but we keep spending time without ever knowing the balance of how much time we have. That's an interesting difference. But but the point is that if you're truly trading to make money, then you have to ask yourself, what do I have to do to make money? And the only answer I can come up with, maybe someone else has an answer, apart from getting lucky and winning the lottery, or risking your farm and winning on a huge trade, one swing, is a trade plan that you can prove will grow your account if you just follow the plan. And you have to prove the plan first before you start trading it. So there's this preliminary work, this foundational work that you have to do before you start trading real money. It's a step-by-step process. And so this is where traders get it wrong, because if they're truly trading to make money and they agree the only way to do that is to have a plan that they can prove will indeed make the money, then why aren't they doing it? Why are they doing other things instead? So the simple indicator is, with the person in the mirror, are you doing the things that are congruent to your stated reason for trading in the first place or not? That's like, you don't even move beyond the next step until you line that up. And it takes a lot of humility and being humble, being honest with yourself and going, oh, wait a minute. If I'm not doing the things that I need to do in order to achieve my reason for trading, maybe I'm not trading for those reasons. Maybe I'm trading for some other reason that I don't understand. I subconsciously, I've got something else going on that I got to work out. A lot of people trade because they have a low self-esteem. They're trying to validate the reason for existing in the first place by proving they're smarter than the markets. But that's no reason to trade. And yet they won't even realize that, but that's what their actions indicate. Remember, action talks, not words. You have to, it's not what you say, it's what you do. So if your stated purpose is to trade to make money, to achieve that level of freedom that you want, to win your time back and to just have the freedom of choice, fire your boss, live the kind of life you ever wanted to live, if that's truly your reason for trading, which I believe is the only reason, there's no other reason makes sense. That is the reason to trade, and then it can give that to you. But then you have to be really humble and honest with yourself to make sure you're doing those things to achieve that stated goal. And right there is going to say where you're at in your development, right there, because that's going to inform you and inform me as a mentor what your next step should be to solve anything where the incongruencies exist. And they do for most people. A person trying to trade is never going to line those things up unless they've got someone guiding them, even bringing it to their attention in the first place. Most people don't even think of these things. But the root to all evil when it comes to a losing trader or a person trying to trade losing is because they haven't fixed that first thing. They're not trading for the right reason, or if they think they are, but they're doing other things that aren't congruent. That's where it all begins. That's where the unraveling begins for everyone.
I totally agree. I mean, I think pretty much every trader, goes on essentially the same path. They just reach points at different points, different realization points. But if you do it on your own, as you say, you don't really understand how key them points are. It's not about making money. You're making money when you have a reasonable amount of money behind you. It's just quite easy. Keeping hold of it, that's the difficult part. And then the real kind of test of a trader is when you have that inevitable break of your rules and you have a loss. That's what's going to define you more as a trader, your first real loss, rather than your first decent win, I would say.
Yeah, I mean, I would even change that a little bit, and I say like the worst thing that can happen to a trader is if they break their rules and win.
Yeah.
Or if they just start winning right away for who knows why. I mean, the broken clock is right twice a day, and luck is a double-edged sword. So you might have some good luck for a while. But
for sure,
luck, a schizophrenic. So bad luck swinging around and will humble you really quickly. I mean, that happens to a lot of people. It happened to me. I made 12 grand in my early years trading crude oil. I had to talk to my broker on the phone to place these orders, and I took her advice after 3 weeks of just win was great. I was like, wow, this trading thing's amazing. I got it nailed. And then I lost it all in one day, doing something stupid, following someone else's advice, not having a plan, not doing any of the things that later I learned. Like, I didn't know this stuff in those days. But I mean, that was a pretty hard kick to the stomach. Experiencing something like that for the first time is hard for anybody. But it wakes you up, and that was maybe the most profitable thing that ever happened to me because it set me on a course that, ultimately changed everything. Not overnight, but yeah. So I started calling a live trade room 24 years ago. I forget exactly, but I called a live trade room for 18 straight years. And nothing was more difficult than the very first trade on the very first day when the curtains open and there's 186 people in the room. And the trade just didn't feel right. It didn't look right. It didn't feel right. It was the right trade based on the strategy, not my strategy. It was someone else's. I hadn't created strategies yet. And I almost didn't call the trade. And then I had those 4 magic words pop in my head that saved my life, saved a lot of my future students and future traders that I'd worked with over the years. And the reason why I thought about it was I wanted just to be a professional. I mean, if I didn't call the trade and the trade won, I'd be an idiot. And if I did call the trade and the trade lost, I mean, it's not my fault. I'm just being a professional calling the next trade of the strategy. So it made the choice really simple. And the 4 words were lean on the system. Lean on the system. I had a system. It wasn't mine, but I still had one. And it took so much pressure off of me that I was able to call that very first trade on the very first day. I'd never done it before, ever. And that day we lost 17 ticks on the Russell E-mini. In those days, it was $100 a point. So $170 a contract was the end of the session as it ended. The system had a losing day. And the next day, half the people were gone, never to be seen or heard from. And then at the end of the year, we were up 156 points a contract, right? And then on the 1 year anniversary, we were up 17 ticks. You couldn't have written a better, script. But that really happened, and it goes to show that the system is what makes the money, and it's the people that are trying to trade who lose the money, or who aren't trading, who aren't doing the things, like they don't know why they're trading, and they haven't even thought about it, or if they have, they don't realize their actions suggest that they're trading for some other reason they don't understand.
Yeah, 100%. So with the kind of systems and the kind of methodology you have you ever looked to go down the automation route? Is that anything that you've ever kind of delved into?
Well, I'm not a big believer in automation until recently. I had this incredible interview. It's going to come out on my new podcast. Can I say that?
Oh,
It's
yeah.
starting next month.
Of course you can.
Yeah, I'm
Yeah.
starting a podcast, Backpack Trader, and I don't want to steal his thunder. It was an amazing interview, but he's a huge believer in automation, and he actually has some incredible systems that he uses to help people with prop firms that are funded through prop firms. And I'm
Okay.
really excited about that. But before I interviewed him and heard his story, um, I only used automation to this day. I still only use automation for helping me as it's a tool to create swing trade plans.
Yeah.
So I use that to test a particular pattern and see how it did over the last 10 years and
Sure.
use that as a basis to develop a trade plan for that symbol. So I use automation for that. I don't use it to trade. And I don't think you need to, because if you're trading with the backpack trader style, you learn how to trade with a bracket order. And when you place a trade, the targets and the stop, it's all preset. It's like a template.
Yeah.
And you learn how to do it. And so, then if you're finished in the first trade 40% of the time and you're only trading an hour a day or less, I mean, I realize that we live in a microwave mentality and the attention span of the average person is about 5 seconds, but you learn actually to have a little bit more attention span because of what it means to you in your life. And you learn how to focus, and it becomes
Yeah.
Zen and the art of your me time. My me time is trading my trade plan when it's time to do it. My wife knows don't bother me. My kids know. No one's answering. I'm not answering no phones, not looking at no emails. It's like, focus on why you're here, what the trade plan is. You be the CEO of your trading business. And that's what my program is. It's a CEO trader mastermind. Takes a person trying to trade and helps through the step-by-step process, transforms you into the CEO of your trading business. And then at that point, you're able to trade live with your full risk parameter, usually like 2% of your account on a proven trade plan trade. And that's it. Nothing else. Don't take another one. Don't do anything else. The trade you're taking is because the trade plan was proven. You've done the work to where you've acquired the necessary belief in it. You've learned how to execute it. So now you have a trade plan with rules. You believe in it because you've proven it will grow your account and make you money, your stated reason for trading in the first place. You've practiced it until you can execute it perfectly, flawlessly. And you've earned the right to now open your doors to the public, open your business, and run your trading plan as your business. And now you're the CEO of your trading business. And that's, I think, the recipe for success. There may be others, but that's the one that I know will consistently work for whoever. I mean, anyone can learn this. It's a lot harder to learn how to play a double stroke roll than it is to learn how to trade.
Well, I mean, that's the thing. There's a big difference between learning, isn't there, and actually doing and putting in place what you have learned. That's what you said about the two paths. I think that's quite an insightful thing to say. That yes, anyone can learn to trade, but learning to make money from trading is a different side to it.
Yeah, and the metaphor is painting by numbers. Anyone could put the yellow in the triangles, the pink in the circles, the green in the rectangles. Anyone can do that. But that doesn't make art.
What's interesting for me is obviously you've got the very methodical approach. You've got the other kind of, kind of path that sets you on to become the CEO of your own trading business. I get that. So how do you really kind of teach people to deal with kind of, data? Obviously, we've got a lot of narrative running through the markets, a lot of things like Donald Trump saying things about, X, Y, and Z, tacos, etc., etc. Do they just become a better winner or just a quicker loser? Or do you kind of help people adapt to that kind of more kind of fundamental side? I'm just interested, how you kind of, you deal with that side of trading.
Well, again, I point to my philosophical point of view, and that's what keeps me like between my guardrails. There, when was there a time when there wasn't some headline news or some unforeseen thing that happened in the market that made prices move up or down or whatever? When did that ever exist? Today? Yesterday? 6 months ago? 6 years ago? I mean, I remember the flash crash of 2010. Whoever would have predicted that? I actually was in the webinar teaching one of my strategies at the time, Trend Jumper, and the flash crash happened. And I started trading it while I was presenting because it was just, and I'd never do that now, by the way. That was before the whole trade plan hacking framework, second path of learning even was you know, an infant. It wasn't even in my mind yet. But the point is that no one will ever know everything that happens in the world, and the collective wisdom of the market is what pushes the price and the way it reacts to whatever happens. I mean, the market could be reacting, we're like, why is that happening? I mean, maybe we find out later after the
Yeah,
fact.
sure. Yeah.
So for me, the philosophical point of view is that what I told you earlier, price patterns reflect human nature, and they repeat over and over again. And so my job as the CEO of my trading business is to only focus on the price pattern that I know the likely outcome is the odds are greatly stacked in my favor. And so the markets might react to this or react to that. But if it doesn't fit within, if there's no price pattern that my strategy is identifying, then to me, it's just modern art, frame it and put it on the wall. I mean, it doesn't mean anything to me. I want to trade to make money. I don't need to trade to be right or to outthink the market or to hop on a roller coaster because it's fun. I mean, those aren't reasons for trading for me. So that's why I started off by answering your earlier question about the whole philosophical overarching point of view helps keep you focused on what really matters, and that's your reason for trading. So how does reacting to what Trump did or anyone else, how does that impact or even affect your reason for trading and your stated vehicle to achieve that reason, your trade plan? So that question comes up that you need to answer. And if it doesn't, then it's an easy answer. You don't do anything. And if
Yeah.
it does, then there's the next trade plan trade right in front of you. You might have a rule that says wait for volatility to level out. Like if I'm trading the crude oil inventory report, although it's been dead lately, but for years and years and years, you wait 2 minutes when the report comes out because the price action is out of control. You don't try to get in on that. You wait till it starts to, get back to normal, and then you start trading. So there's smart little things you can do to avoid, getting caught up in something. You don't want to lose control of your trade, right? You never want to lose control of your trade. If you lose control of your trade, you need to just exit as fast as possible. But if you have a good trade plan, it won't let you lose control of your trade. I mean, you never know. You might be in a regular old trade, and then there's an earthquake and California slides off the continental shelf into the Pacific Ocean. You might lose control of your trade at that point, or
Sure, but you got bigger problems then, though, don't you?
yeah, meteorite slams into the middle of Manhattan, you know, okay, what are you going to do?
Well,
Trading
that's
for
it.
right?
It's the end of the world trade, isn't it? If it really is the end of the world, what
Right,
does it really matter?
exactly.
Yeah, I mean, it just really, kind of obviously, markets are always evolving and changing. And, I think you're exactly right. What you say, the kind of process doesn't change. The plan doesn't necessarily have to be changed once it's been proven. But obviously, the way we're delivered information, or I guess, new generations of traders Back in my day, it was Bloomberg, Reuters, Squawk. I was on the floors. That's a different mentality. You don't need that now. But a lot of people, listen to what's said on Twitter and X. And I think the point I was trying to make is, for the new traders or people that want a strategy and plan, it's like, how much importance do you put on that? And I think you rightly said, if it doesn't fit your plan, none. I'm trying to see from both sides of, the spectrum. I tell people, from my experience, but I'm always interested just to kind of, listen to other people who've been doing this for a long time, what the kind of view of things is. I don't know, the way I described it in one of my books was like, we've almost got Stockholm syndrome in news. We love to hate it. We know that maybe a lot of it isn't true or designed to create a narrative, but it's still doing something in the markets, and you have to be able to ignore it, filter it out. It's just, I guess, a part of modern life, isn't it?
Yeah, exactly. When it comes to swing trading, I prefer daily charts, 1 bar a day. It's easy to manage. And then like this, you can kind of look at it at your convenience and work within a busy lifestyle. It should take you 30 minutes a week or less on
Yeah.
average, total amount of time to run your swing trading. And so with some of my strategies, they literally set you up to go short days in advance before the major impending disaster that hit headline news. And it's because of the price pattern. See, if you believe in the overall philosophy that human nature doesn't change and there are price patterns that repeat so often that we could likely predict the outcome, then I always say trade plans work in mysterious ways. And so there was the flash crash, of course, was an example that I gave you. There was the COVID crash. As you name it, there's all kinds of crashes. And I'll show you. All right, so this is a slide presentation that is irrelevant to what we're talking about. But basically, over here where the white arrows are, there was a short setup in the SPY,
Yep.
right? Which is the ETF for the S&P. And that happened in front of the COVID crash that then happened afterwards. And it gave you these nice predicted targets, which incidentally got hit perfectly. And another setup, which, and so you would have been short before the market crashed as a result of COVID because of a pattern that exists and repeats so often that the likely outcome is predictable. And remember what I said, when this happens on the right edge of the chart, like this long trade right here is on the right edge of the chart. Well, that was the first trade, one of the largest bull markets that we've experienced. What happened after the COVID crash, right? So the immediate past set up this setup here, and it gives you a long trade. You have an entry where that little plus sign is. You got 3 targets. Those targets are the future being predicted. And incidentally, they got hit right on the nail, just like these shorts. So imagine this on the right edge of the chart, right before the COVID crash. And then targets being predicted to get hit perfectly. And then another one. Notice one's bigger than the other. It's a concept we didn't bring up that I might as well mention now. I utilize this idea I learned a long time ago. And maybe 18 years in a trade room gave me an unfair advantage of seeing so much and being a drummer, recognizing patterns. But a trade plan or a trade method, the first track of learning, the actual techniques that are dynamic. In other words, the pattern can dynamically adjust and tune itself in real time. So depending on market conditions, one trade might be larger. Next time, the same trade might be smaller, depending on the conditions of the market at that time. So I create these strategies that literally can tune themselves and are dynamic. That's why you see the smaller trade here with the accurate target, the larger trades here, also accurate targets, because they've adjusted to market conditions. And it's using math that's been used for hundreds of years. I always tell the story of ancient feudal Asian rice merchants making buying and selling decisions of large shipments of rice on the docks with their abacus. And that same math works today. And I use that to measure the balance of power between buyers and sellers, which helps through certain techniques that I've learned over the years to project a very precise and accurate immediate future or targets that tend to get hit a lot right on the nail. So the next, I'll just show you one more. This one here is the flash crash of 2010. The flash crash actually happened here on this day.
Yep.
And if you're day trading, that was just crazy, crazy, crazy. But 1, 2, 3, 4 days earlier, you would have been short. You would have had the setup. Look how accurate, right? Anyway, again, the pattern itself knew before the event happened. The collective wisdom of the market, like the clues are there. And if you know a price pattern to zero in on, as long as it's part of your trade plan or the strategy, you have a trade plan, you already know, hey, it may not, we don't have to know there's going to be a flash crash in a few days. We just have to know that if we get short, the odds of us winning are very large, and the odds of us losing are possibly, we could lose, but those are much smaller. So you win more when you win, you lose less when you lose, you grow your account, you become a successful CEO trader.
Yeah, no, exactly right. I mean, it's a very interesting approach. You can see, you put a lot of emphasis into it. And obviously, it's always interesting talking to different people. You say you're a drummer, recognizing patterns, and you put some maths, some framework around it. It's always interesting to people, got to where they are as a trader. And again, it revolves around a lot of time. But those little individual things, your individual skills, are what make you a good trader. No one's just going to give you all these skills, are they? I think there's something in you as a trader that you have to harness.
There is, but I also think that anybody can learn how to do technique.
Yep.
And the bigger challenge is learning how to harness yourself.
Yep.
Because it's easy to push the red button and the green button. It's not so easy to push it at the time you're supposed to push it, or not push it at all when you're not supposed to push it. That's the hard part.
Exactly right. Exactly right. I think that's where a lot of traders' frustration comes from, because, you can do everything right, you can learn everything, but as you said, it isn't going to teach you. It is going to teach you how you react in those situations. So anyone could be taught to trade, as we said, but, being taught how to make money and follow the system, even when it's not something you're fully, like you say, kind of, congruently kind of, invested in just yet. You have to follow systems in order to see it work, then to repeat it. Yeah, no, it's really interesting.
I agree with everything you said, but there's a couple things that I think are important to add. We're smart enough to be able to understand this is true, right? Intellectually, we get it. What people don't get it at the level that they need is on a deeper level, on the primal level. It's not just emotional, psychological, but it's everything that you are that makes you a person. A person's going to lose because we're going to run away from anything we perceive as a threat. We have to evolve and become something else that isn't natural, a trader. And so, but there's a step-by-step process to do it. And so you have to believe in what you're doing, and you can't just intellectually know it's true and talk yourself into believing. We could all shake our head yes and say, I believe. But then when the arrows are flying and you're running away, trying to dodge the arrows, you get struck in the back. That's the feeling of being in a trade where you have no control over and you're losing. And right, it's like, again, you're back to that the need to control your environment so that you could feel secure and that your survival isn't at risk. That's such an important thing. But you can acquire the belief in what you're doing. I call that the trader foundation. So I always talk about the trader three-legged stool. You've heard this metaphor before?
No.
What happens with a three-legged stool if you take one leg away? It topples over, right? Okay, so one leg is your methodology. Could be a technique, a strategy, methodology. We use the word strategy loosely because it can mean so many different things, but just your trading methodology. The second leg is your money and risk management, right? So you got to ask, how come a great trader can become immensely wealthy with a mediocre strategy, but someone who's ill-equipped and doesn't know how to trade is going to lose everything with an excellent strategy? It's because of money management, basically. Or the third leg, which is trader psychology, right? A person trying to trade isn't a trader. A trader psychology is just another word for being a trader, but it's not something you could talk yourself into. You have to acquire that skill. Well, what good is a three-legged stool if you can't put it down on a firm foundation? No good at all, right? You can have all three legs, but it's still not stable if it's not on a firm foundation. What is the foundation? The Trader Foundation. I have an ebook called The 12 Powers of Successful Trading, and I talk about this in depth, the power of foundation. The Trader Foundation, without it, you're going to sink like quicksand. You're going to lose. The foundation is nothing more than belief. Because if you're on the right edge of the chart and you're trading, you don't know what's going to happen next, nor do you have control over it, then you're going to be in big trouble if you don't put it in the context of something bigger that you do have control over. So there's this whole idea of surrendering to what you don't have control over and instead focusing on what you do have control over. So what you do have control over is proving that that trade that you took is part of a trade plan that will grow your account and get you to your financial goals. You have control over that. You can control trading a trade that's part of a proven trade plan or not. And the only way you're going to trade that is if you believe in it. And you don't just shake your head yes and say, I believe. You have to acquire the belief by doing the necessary things. That's where the epiphanies happen, the aha moments, the light bulb moments, the transformational process. We don't need more information. Obviously, there's so much out there, it just makes you confused. We don't need more information. We need transformation. You have enough information. You need to put in the work to acquire the belief in what you're doing. And there's a structured way to do that, which I call the trade plan hacking framework. But you can call it whatever you want. If you don't believe in what you're doing, you're going to do everything wrong, and you might as well, open up a pizzeria instead. You'll make more money.
Yeah, no, that's wise words. That's wise words. It's been very informative. I think a lot of people are definitely missing one of the steps of the stool. That's for sure. That's interesting.
Foundation.
Or maybe the foundation in general. Yeah, no, that's
I'd say more people are missing that than anything. And by the way, that third leg, the trader psychology, think of that as the one that anchors down into your foundation. Because without the foundation, there's no trader psychology. There's the person trying to trade psychology. Trading's not natural because you have to surrender to what you don't have control over. That's not natural.
Well, exactly. Yeah, exactly. It's some deep thoughts, and I guess that's why it's always interesting. Like I said before, without repeating myself, just to speak to different people that have traded for a long time, and yes, there are certain fundamentals in trading that will work for everybody, but there's also people have to be open to being explained to, and like kind of thinking about things in a slightly different way, because that really, I think, where the magic in trading happens. There isn't one book, there isn't one method, there isn't one right way. It's like being a parent, I guess. There isn't one exact proven way to raise kids. There's certain things you don't do, but then, there's lots of variations. You can still have a good kid at the end. So I think trading, especially now, I think because there is so much information out there, so many, gurus, so many kind of people with their kind of spin and take on it, that, there's a few little bits of wisdom that just shone through there. But yeah, it really kind of made me think as a trader, which I found was very interesting. So hopefully that's going to help the listeners too, because it's not often that you hear things and you think, yeah.
I have a unique point of view. I think I've got almost an unfair advantage. Not too many people have had the privilege of calling a trade room for 18 years, and that's a lot of market time, not to mention all the trading involved and working with traders and creating all the strategies I've created. But one thing that also hit home for me, which is it was a learning experience, was learning. It is one thing to have a good strategy, right? I mean, there's a lot of people out there now, like you say, the gurus have really proliferated, and who knows, many of them probably have really great strategies for them. But most people can't do what they do. Most people can't trade that strategy the way the creator of the strategy can trade it, right? Like the way I trade, I don't even teach people because it's like I can't quantify it in a way that makes sense. What I learned this is part of the trade room experience and working with another firm for a while when I started creating my first strategy, is being able to create something that can be taught and then learned by others. That's a whole different animal. So you have a bunch of gurus out there with all these great strategies, but have they really learned how to teach it to others in the way that others could prosper with it too? I'd say that when you put that as a filter, you lose a lot of them. There aren't that many.
For sure. For
That's-
sure. Yeah.
So having something that can be taught and learned by others is, what good does it do you or anyone else how I trade? How does that help you if you can't do the same thing, right?
Yep,
What helps
exactly
you is
right.
if I show you a structured way that you can also do. So you'll notice with all my strategies, for example, all the trades will always print. You'll see it. There's no guesswork. Like, everyone knows how to get into a trade, but the hardest part is knowing how to get out of a trade, right? Because they don't have this idea that the immediate past can predict the immediate future, and that's what the targets are and our price objectives for that trade. We already know where we're going to get out. We know where our risk is. We're going to get out at that stop loss if the trade goes against us, and we're okay with that because it's just another business transaction, and it's a cumulative effect of all those transactions that make up the results of the trade plan and grow your account and get you to your financial goals. It's not the trade, it's the trade plan. So it just puts a different spin on it, puts your focus on an entirely different thing. And now your chances of success are probably going to go through the roof, or you'll be better off than 90% of the people trying to trade out there have.
Totally agree. Totally agree. Well, so that's been great. You know, a lot of insight there, a lot of things that I found very interesting. Is there a way that you like to be contacted if people want to kind of learn more from you? How can they get a hold of you?
Yeah, great. So two things. One is that I love answering emails. I answer them all the time. So Troy at backpacktrader.com. And then I have a free training that I could, anyone can sign up for. It's called
Yep.
Backpack Trader Live. My favorite people to work with are people who are considering trading and haven't traded yet. And they're
Yep.
hearing all this stuff, and
Blank slate. Yep.
they're wary, they're afraid of the risk, they're afraid of losing the farm, whatever. And I want to just encourage, if that's you, if you're a listener and you're considering trading, first of all, keep that fear, because we don't want you losing the farm, but realize there's a right way to do it, and you can learn step by step in a way that's safe, and you can learn how to transform yourself and become a CEO trader and prove that your method of trading will make you money before you ever risk one penny. And so that's one of the things you'll learn about if you attend my free training that we're offering your listeners.
Okay, well, that's great. Thanks very much for your time today, Troy. And if you like this interview, please remember to like, subscribe, drop any comments below, and we'll get back to you. And as always, I'm Steve Ruffley, and I will see you next time I do another podcast. Take it easy, guys.